Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Well, after a year-long hiatus, earlier this week the US Fed Reserve finally raised the Fed funds rate by 25 basis points to between 0.5% and 0.75%. The move, the second rate hike since 2008, was widely anticipated. And the US Fed, unlike our own RBI that has preferred to upend markets by maintaining status quo on rates, despite the market expectations of a cut, played along with markets. Consequently, the kind of turmoil that one would normally have expected from such a move was largely absent. But more than the action, it was the Fed's commentary that has created some discount. Should we be concerned? If yes, how concerned? And helping me join the dots are two experts, Ajit Ranade, Chief Economist Aditya Birla Group, and NS Venkatesh, Executive Director, Lakshmi Vilas Bank. Welcome to the show, Ajit, Venkatesh. Well, as I said, it's almost a year since the US Fed last raised interest rates by 25 basis points and projected that rates would rise to close to 1.5% by the year end, that is 2016. This year, the Fed seems to have pressed the replay button. It has once again raised rates 25 basis points, and not just that, it has repeated last year's projection as well, indicating that rates would rise to 1.5% or thereabouts by the year end. Whether we'll see a repeat of what followed the Fed's decision last year, with the Fed losing courage and rates remaining unchanged for virtually the entire year, remains to be seen. But what is your sense, Venkatesh? Will there be a rate hike? If so, how many?
I believe that the projections that have been put out this time of maybe doing a three rate hikes for the next year should come true, for the simple reason that essentially they believe that the inflation has come up to that 2%, and the labor numbers are not showing that sort of a slack. The economy is showing signs of growth, and on top of that, I think they must have looked at the new incumbent president going away and the new president coming in, and they are thinking that there could be a fiscal stimulus which could come in. So to that much extent, the fiscal stimulus could stoke the growth as well as inflation. So hopefully, I think the three rate hikes are on track for 2017.
Ajit, do you agree? And for the same reasons, do you see the Fed hiking rates again in 2017? And why? For the reasons given by Venkatesh or some other reasons?
Mythili, the Fed has flattered to deceive over last 12 months. As you said, last December 2015, 4 hikes during 2016 were almost a given. But we had 0 hikes during the 12 months, except until a couple of days ago. So I think going by that track record, I'm not so confident that we'll definitely have 3 rate hikes. This rate hike, particularly in December this week, was practically forced by the markets, in the sense that the yields had gone up, had sort of gone ahead of the Fed's decision. I think the fact is that even though the US economy numbers are looking good, as Venkatesh said, the job growth, job additions have been about almost 180,000 or close to 2 lakhs every month for the last 3 months, and inflation is inching up, but it's still well below the 2% target. So it's not even reached 2%. And if you increase rates too rapidly, it's a precarious situation. You can't risk going back into recession. So I think they'll be cautious. My guess is we can expect maybe 2 during 2017. And a lot will depend on how the fiscal spending affects growth. You see, the fiscal spending has two sort of impact. One is, of course, it is a stimulus, so therefore it helps growth. But by expanding the deficit and increasing interest rates, it affects the housing sector and many interest-sensitive sectors in the US adversely. And transmission mechanism in the US is much better, let's say, than an economy like India. So higher interest rates can potentially derail the growth process. So we don't want rates to rise so high that we start talking about the possibility of a recession. So I feel probably 2 rates is what I'll go with. Okay. 2 rate hikes.
2 rate hikes this year. But Venkatesh, as Ajit pointed out, conditions this year are actually not very different from what they were last year. The unemployment rate is about the same. Inflation is below the Fed's target of 2%. Global economic growth is quite uninspiring. In fact, the IMF lowered the world GDP growth rates, and interest rates around the world are historically at low levels. So what made the Fed change its mind? Could it be that despite all the noises to the contrary, the Fed is actually much more influenced by politics than it would care to admit? Venkatesh?
No, I would say that essentially there is an independence of Fed. I'm not questioning the central bank independence at this particular point of time. I would say that essentially they are looking at data, and based on data dependencies only the decisions are happening. Maybe when Ellen talked of the three sort of rate hikes, possible rate hikes for 2017, I think she must have factored in the fiscal stimulus which maybe the Trump administration will be looking at. So that definitely puts a little bit of pressure on the inflation, and towards that, as Fed has the mandate to ensure that the inflation is contained, I think that is where I think the third rate hike is coming. Otherwise, I do agree with what Dr. Ranade is talking, that maybe too much of a rate hikes will spoil the mortgage business and will have repercussions on the house buildings and those sort of things. But yesterday when I was looking at some of the commentary, the National Association of House Builders was welcoming the move of this rate hike, and they were also welcoming, saying that the stimulus will help maybe more houses to come, and will also impel a little bit forward momentum to the growth. So I would, at this particular point of time, I would say that whatever the Ellen commentary had come, it's a little bit hawkish, and that's why the markets also have looked at it in that sort of a fashion. But I would still say the independence of the central bank is very much intact at this stage.
Okay, Ajit, what's your take? Because even if one does continue to delude oneself saying that central banks like in the US Fed are not influenced by politics, the reality is that monetary policy has always to consider the fiscal stance, as Venkat pointed out. You might not have the dominance of the fisc as in India, but the fisc frankly is far too important anywhere to ignore. And when the fiscal stance is loose, there is no alternative but to have a tight hold on monetary policy. Would you not agree that that in some way constrains the Fed?
Absolutely, Mythili, absolutely. In fact, the Fed chairperson, Janet Yellen, was asked this question as soon as the Trump victory was announced, that will it change anything? So she went to great lengths to explain that Fed decisions are not affected by who's the next president or what the policy is. The very fact that she had to put out a statement says something. I think that itself is significant. And I think the market is welcoming this rate hike only because it comes with an implicit guarantee of a fiscal spending spree. That's what the market is thinking. So I think it's a very it's a very precarious situation. I think that if you will have a situation where the US will go into next year with a promise of huge fiscal spending and a tight monetary policy. So they're going to be working at cross purposes. So monetary tightening and fiscal loosening. And we don't know, going back to the numbers of 180,000 jobs created for last 3-4 months, it's not clear whether these are the jobs which are high quality jobs, manufacturing jobs, or so one has to look at more details. And even this 4.7% unemployment rate, which is supposed to be the lowest since 2007, even that is affected by lower rates of labor force participation, aging American society, workers getting discouraged from even participating in the labor force. So there are a lot of intricacies behind the numbers. So, and in light of that, an aggressive rate hiking spree, by the way, we keep talking about the 3 hikes in 2017, but the statement talks about 3 and 3 and 3, so 9 hikes in the next 3 years. They say by 2019 we want to reach something like 2.7 or 2.8%, almost 3%, which is the long-term the policy rate. That I think is extremely aggressive. So I think almost as if the Fed chairperson was compelled to put out a hawkish tone, although the economy is not supporting this kind of hawkishness. And I'm not at all convinced, as you said, the rest of the world is living with negative rates. You look at Japan, look at Switzerland, look at Sweden, look at Eurozone. Even the Eurozone chairman went to great lengths to explain how his announcements doesn't really amount to taper. So everybody is trying to hedge their bets, saying that we're not trying to derail recovery, but we have to raise rates. And the raising of the rates in America is mainly because of the fiscal push.
Okay, but despite all the uncertainty around Venkatesh, should we take heart from the fact that the said chairman's confidence in the strength of the US recovery, and I quote, Our decision to raise rates should certainly be understood as a reflection of the confidence that we have in the progress the economy has made and our judgment that this progress will continue. It is a vote of confidence in the economy. Or should we worry about the implications of higher interest rates for capital flows into our country? Which is more important for us, US recovery or higher interest rates which will impact flows into India?
See, two things here. That is, one is essentially US is growing. Definitely, that will give maybe a boost to our exports to that country. So to that much extent, it will help us in maybe increasing our growth. Though, just like Ajit was telling, the other parts of the globe are all not growing that much or decelerated. So to that much extent, I would say this US, which is the largest economy in the world, if it's showing signs of growth, I think that will open vistas for India to actually export to US. That is one thing which will be positive for the Indian export-oriented sort of companies. The second thing I would say is that compared to the other parts of the globe, then there is only two countries which are growing. One is essentially the US, the other one is India. So where does the fund managers and those savers will put their money in? So the whole money will not go to fund the US growth. So the investment will definitely come to the shores of the emerging market, and in the emerging market definitely India looks to be in a much more better trajectory than any other country. So this is, I would say, both ways it helps you. One, it helps you in your industry to grow so that it propels our growth forward. Second is it also attracts capital investments into the country. Whatever has happened after the rate hike, I would say is a knee-jerk reaction. Maybe we need to see that going into the new year. But I would definitely say this rate hike is positive for even India in that matter.
Not sure I share your optimism, Venkatesh, but I'm afraid on that note it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the implications of the Fed rate hike. What does it mean for the US economy, the world economy, and more importantly for India? Ajit, even as Yellen spoke about the economic recovery and Venkatesh was quite optimistic, she also admitted that the Fed is operating under a cloud of uncertainty. What does that mean? Does it really dent the confidence in the Fed?
Yeah, Venkatesh said that the US economy, which is the largest economy, is going to grow, well next year. That's true. And how much of it means export opportunities for India, we'll have to see, because the new president is also supposed to be quite protectionist on trade. So we have to be cautious about it. And these estimates which are coming out, if you look at IMF, they are saying US growth rate will go up from 1.6 to 2.2% in 2017. But the IMF track record, not just for last year, but last 5 years almost, has been that their estimates or projections which they make in the beginning of the year are systematically and consistently downgraded in the next four quarters. So I think the recovery is still a bit uncertain. It's true that the US, of course, is a dynamic economy. They have large amounts of immigrant labor. They're not as aging societies like Northern Europe or Japan. So to that extent, the demographics supports growth. But for them, the growth has to be around 2.5%. It can't be just 1 or 0.5%. And that's where the uncertainty lies. And that's why I said the fiscal stimulus will provide growth, but at the expense of higher fiscal deficit. You see, the US debt is already close to $20 trillion, and it needs congressional approval to keep raising those limits. Thankfully, the Republicans hold control on both the houses, but Republicans, by their very definition, are hawks when it comes to fiscal situation. So we can't take their support automatically for granted that they are just going to allow reckless spending on the debt side. So all these uncertainties are there, and therefore I would say the rate hikes, we don't just count on them. And in any case, this what's happening is the dollar is strengthening so much that also potentially, if it keeps happening like this, that potentially spells bad news for the rest of the world.
And in this era of increased uncertainty, Venkatesh, are we also seeing signs of impending disagreement between the Fed and Trump? In fact, Trump has made a lot about getting more jobs in America, but the Fed's reading seems to be quite different. In fact, to quote Janet Yellen again, she says, "So I say at this point, fiscal policy is not obviously needed to provide stimulus to help us get back to full employment." So the Fed clearly doesn't seem to see the importance of jobs as much as Trump did. So is there some disagreement between the two?
No, maybe I would say that as the new president coming in, he has to definitely promise more jobs. Because that is one of his election planks on which he has come in. And I agree with Dr. Ranade in the sense that there is a little bit of protectionism which is there in his speeches. But having come into, let us say, the president, I think he will maybe soft pedal a little bit on that. And we should see more job creations which could happen. The quality of job creations, I also was looking at those numbers. The hourly wages, I think, has come down, actually dropped, which ensures that maybe at this particular point of time, maybe the quality of jobs that are getting created are not to that great extent of the highest quality. But going ahead with the various meetings that he has done with the various business leaders, I think there is a sense of optimism which is building up in US for them to actually start ramping up their operations. So hopefully that should be there. The dollar index has strengthened. It's at over 103, which is a 14-year high. So to that much extent, maybe it hurts their competitiveness for exports. But for the other countries, maybe it helps in the sense that their currency weakened, so they are able to actually export into the US. I would say that it is too early days for us to evaluate as to which way this job number is going. So that is where I think Ellen is a little bit cautious. And maybe she is not fully convinced about those sort of things which are being, there's a dichotomy of interest between, let us say, the fiscal as well as maybe the monetary sort of stance that are there. But I think after some time we will see some convergence happening there.
Ajit, speaking of Yellen, does it seem as if the two largest democracies have more in common than is generally believed? In fact, there have been questions about Janet Yellen's continuance, much like the kind of questions we heard in India about the continuance of the former RBI governor, Raghuram Rajan, when the NDA government came to power. The only difference is the Fed chairman was bold enough to assert, "I do intend to serve my full 4-year term. I haven't made any decision about the future." So do you see her continuing for now or even after 2018 when her present term comes to an end?
Well, you're right. One of the first few statements she made is, "Okay, folks, I'm going to be around till early 2018. Don't ask me questions about." So I think it was in a sort of a lighter vein. Yeah, but look at the prima facie contradiction here, Mythili, that the Fed statements are trying desperately to tell the markets growth is good, jobs are good, we are starting tightening, we are becoming hawkish. The Trump folks are saying growth is weak, jobs are not there in America, we need to have a huge fiscal push, we need to get back to growth. These two statements to me are somewhat contradictory, and that's why I said, so we are entering into a year where the monetary policy and fiscal policy are actually at cross purposes. I mean, of course, it's going to be reconciled, no doubt. And that's where the tension lies, I think, that that's where the political pressure on the Fed might be there, because I don't know, I mean, when her term ends, there'll also be other developments happening. There are all these elections that are going to happen in Europe. There's the whole US-Russia angle which is now being played out. There is the sort of prickly thing with China when Trump made the phone call to Taiwan. So there's so many uncertainties. Oil is drifting up. Dollar is at an all-time 14-year high, like Venkatesh said, and it's getting stronger. But Trump wants America to export more. A strong dollar will not make that possible. He's also protectionist. So there's too many moving parts, Mythili. So I don't think the Fed chairperson alone is one of the many other uncertainties during this year.
Perhaps that's true. But Venkat, what does a combination of higher interest rates and a stronger dollar mean for the US, for emerging markets, especially for India? What does it mean for India?
I would say that the higher dollar means that, okay, they are not that competitive. So to that much extent, maybe we can find some opportunity of maybe exporting our services as well as goods to them. Their spending is mainly towards the infrastructure. That's what I think. The domestic infrastructure is what is creaking there, and I think he is trying to talk of the fiscal stimulus for pump priming the economy through infrastructure, big infrastructure spending. So I think he is more looking at the local sort of spendings to happen for building the roads or the bridges and those sort of thing. So hopefully maybe we will find some avenues to connect there. So I would say that it is good for the exports to happen. The second thing what I would say is the Indian economy is also, I would say, chugging along, though there could be some temporary hiccups which had happened due to this demonetization. But I would say that we are still on track to clock in a better growth than most of the other economies. So to that much extent, we should see them coming with their investments into India. So I would say it's a healthy sort of a situation that we are in. Barring this knee-jerk reactions which have happened into the stock market as well as a little bit into the debt and the currency markets. But I think there is a healthy tension there. But I'd always, I'm an optimist. I would say that essentially if the largest economy starts showing signs of growth, then it definitely feeds into the other economies in the world. So we will also definitely have a spin-off benefit with US growing.
Ajit, Venkatesh is clearly far more optimistic than I am, because he spoke about the possibility of higher exports from a strengthening dollar. But our strength really lies in service exports. And Trump has made no bones about the fact that he wants to tighten H-1B visas. He's against outsourcing. So will we really see that benefit from our higher exports? And as far as inflows are concerned, surely there will be a flight to safe haven. So I see India losing out on both counts, both because of a stronger dollar and because of higher interest rates. Are you on my side or are you on Venkatesh's side, Ajit?
Well, Mr. Venkatesh, both the optimist and the pessimist, they call themselves realists. So let me try to be a realist here. India has had an outflow of 46,000 or 50,000 crores year to date, outflow, foreign capital. In the month of November alone, we had 27,000 crores go out of India. Okay. A strong dollar means imports will be expensive for India. Oil is already drifting up because OPEC has taken a decision in November that they're going to hold output. So it's already drifting up to 53. It may go up to $55. The GST rollout is definitely going to be inflationary in the initial months or initial years. So all this means that, and then of course the gap between US rates and Indian rates are narrowing, so that arbitrage opportunity of funds to come in, at least the portfolio funds to take advantage of Indian the returns here, that attraction is gone. Dollars are all flowing uphill. The dollars are going to flow from the developing world into US. So there's going to be a dollar shortage in the world. And that, that's not good news. I also, like you said, India's exports, of course, have not done well in the last 20 months or so, and the October data is improving. But we have to do a lot, Mythili, because there is, essentially it boils down to, for manufacturing exports, it boils down to ease of doing business issues, taxation issues. 20%, 1/5 of our manufacturing exports is simply one item, petrol and diesel. But we are talking, we need to get our act together on textile exports. We have lost the race to Bangladesh in absolute terms, not relative terms. So garments, we need to do much more on engineering, and of course I think auto and auto ancillaries are doing well. And like you said, services exports. I mean, our major market is the US. But if you're going to crimp H-1B visas, if you're going to make restrictions, if you're going to require Indian companies to only hire in America, that it's going to be tough going. But having said all that, I think if we get over the hiccups of this Q3, Q4 of this year, I think we can get a V-shaped recovery, because domestic triggers are there. India's fiscal infrastructure spending will lead the way, hopefully, and therefore I agree with Venkatesh on the Indian prospects for a relatively better growth, prospect. So 7.5% is possible. But this the Trump phenomenon, the monetary tightening, and the strong dollar doesn't make it easier for us.
Okay, Ajit, you call yourself a realist, but I think as far as the Trump and the Fed is concerned, I think you agree more with me and you're more on my side than on Venkatesh. But I'm afraid we've run out of time completely, so we'll have to end this discussion. Clearly, we're in uncharted waters. The only consolation, if any, is that we're not alone. The Fed too is proceeding very cautiously, feeling the stones as it were, and that is good news. When there's so much uncertainty in the world today, it's difficult, in fact, it should not resort to pat solutions and rules, especially when most of the macroeconomic rules, as we know, have broken down. Thank you very much, Ajit Venkatesh, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.